Welcome to ShortView Trading. This is your morning market hit for Tuesday, 5th of May. What matters today for traders? So after spending much of the trading session in negative territory yesterday, the S&P rallied into the close during normal US trading hours. That is, of course, of great encouragement to the bulls, added to which the Nasdaq did better than that, performing and trading over 1% higher on the session. But in reality, both the S&P and the Nasdaq remain range-bound in recent weeks. As you can see in the charts in front of you now, the S&P's been failing at its key Fibonacci retracement ratio, which it hit last week, the 61.8% ratio, and has been range-bound really for a couple of weeks now. Similar comments can be made about the Nasdaq, albeit a slightly higher Fibonacci retracement ratio. And indeed, it's not just the US equity indices that remain range-bound. A whole host of global equity indices, key country indices, are behaving in a similar manner. The Nikkei has been range-bound for a couple of weeks. The DAX, similar, albeit it popped above those levels briefly last week. The Korean Kospi, the same message, and so on. So key country equity indices have been range-bound for a couple of weeks, albeit with a small pop above that range last week. But price action in other parts of the global financial markets is troubling. After Buffett's comments at the weekend on airlines, the airline stocks are back at their lows, as you can see in this chart now, added to which the global bank sector has not been performing well in this relief rally, as you can see in the chart in front of you now. Over and above that, leverage loan prices weakened yesterday, and high beta mid-cap indices in the US underperformed once again. Overall, therefore, price action is quite troubling in many respects. Added to which, our short-term models continue to roll over. We've been showing them to you in the last few days. The short-term risk appetite scoring system generated a sell last week and has been rolling over from that level. Technically, the market's been overbought in the short term and there's been little downside protection. Added to which, it's not just short-term models that have been generating sell signals. Increasingly in the last few days, so have the medium-term models. Medium-term risk appetite gauges that we're showing you now have been on sell and are still around that level. Added to which, if you look at some technical models, for example, the overextended indicator on 50 country equity indices, it's back on sell. So the risks remain to the downside. For full detail on how we're playing this market, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, there's plenty going on. There's more US corporate earnings for the first quarter coming out. Disney will be interesting later on today. In terms of key macro, there's plenty of bits and pieces. I think UK car sales will be intriguing for the month of April. There's also several PMIs from the service sector across the globe. And then really the key will be the US ISM non-manufacturing index, which comes out later today. Elsewhere, there's some Fed governors speaking as well. So that's it from us. That's your morning market hit for Tuesday, 5th of May. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Simply search using ShortView Trading. Thank you for listening. Stay safe. Trade well.